You know, if there's one lesson that's been beaten into me more times than I care to count, it's this: the market doesn't pay you for being active. It pays you for being right, and being right often means you've got to learn to do nothing. That's the hardest part. Do you see what I'm saying? Everyone wants to trade, everyone wants action, but the market isn't a slot machine.
Jesse Livermore was an OG, one of the best traders from the 1910s and 1920s. He famously had a massive short position just before the 1929 Great Depression, where he made an equivalent of $3 billion. So we know that he knows what he's talking about regarding trading.
Then one day, I caught myself. I realized I didn't need every swing. I just needed the fat part of the move. The big middle, where the odds are clear, the momentum is there, and the setup is undeniable. That was a revelation. Do you understand what I mean? The market will always give you chances, but not all chances are equal.
I like what he said about getting just the fat part of the move and not trying to time the high. That's why I really like value area setups, especially balanced value areas. So let's just look at this quick example from NASDAQ. Now, when you see a balanced value area like this, which makes a D shape, then when price comes back inside that value area high, then you know there's a high likelihood that it's going to keep going down until the area low. So basically, you're getting the fat part of the move, something like this. So you're not timing the high, but you're getting the fat part of the move, and that's what he's saying in that part of the video.
Wealth comes from compound profits, from stacking gains over time, from avoiding the big losses that set you back months. And what causes the big losses? Impatience. Impatience to force a trade when the market isn't giving. Impatience to double down on a losing idea. Impatience to chase a move after it's already run. Tell me, have you ever chased a stock after a big breakout, thinking it's just getting started, only to watch it reverse and slap you in the face?
Now, this funnily has happened very recently. If we go to the Bitcoin charts, what has happened on Bitcoin recently, we've had this massive breakout just yesterday after Trump made a speech about talking to crypto regulations with all the crypto CEOs. And if you go on the daily chart, you see this massive breakout to the upside. And you know, a lot of people are longing this right now at the breakout. But the correct thing to do would be to wait for the retest or something like this and then enter here. But there's going to be so many people now who are going to be buying at these levels. And once the price comes back down, there's a good chance they're going to get liquidated at these lows before the actual big move happens and the huge reversal for another maybe big crypto bull run, and they're going to be left behind liquidated at these at these levels.
That satisfaction, that profit, it comes only because you waited. Boredom is the price you pay for success. Can you endure boredom? Can you sit through quiet days without forcing action? If you can, you've got a chance in this game. If you can't, you're better off finding another line of work.
This is why before every trading day, I look at the forex factory calendar of the major news events and look at the red signals, the red letter news days, not just the orange or yellow ones, because they don't have much of an impact compared to the red ones. Now, the red ones are the days that you want to trade, and specifically around these times, because that's when the volatility will kick in. Like on days where there's no news, like this day on Friday, you've got to be really cautious and really patient, and even consider not trading those days to avoid unnecessary losses.
Trading is about survival first and profit second, and survival depends on your ability to protect your stake. Every dollar you put into a poor trade is a dollar you cannot use when the real trade shows up. Think about that. Isn't that the most overlooked truth in this game? You only have so much ammunition, And wasting it on weak setups is the fastest way to run yourself out of the war before the battle even starts.
I really liked what he said about protecting your losses and protecting your lows, because I'm always with the mindset that if I take a setup, let's say I'm long from this low here, I really want to define my TP1. So let's say my TP1 is here at this high. And once that's hit, I want to protect my losses. So what I'll do is move stop loss to break even. So if even if the price comes back down to hit the stop loss, I've got a bit of profit and I've protected from myself from losing the trade. So in the long run, this will play out because you'll minimize your losses. Now, there is a frustrating part to this kind of risk management where you will get some break even trades, but that's just part of the game and you have to accept it.
The setup lined up, I already knew the stock like an old friend. I knew how it breathed. I knew how it reacted. That allowed me to act instantly, without hesitation. Can you see why waiting must be active, not passive? Preparation is what gives you conviction.
I love that. Preparation is what gives you conviction. That's why before every trading session, I have a specific routine where firstly I check the news, then I go through a checklist to find a confluence of high probability trades that I can get that day. And that gives me the conviction to wait. And anytime I haven't followed that daily routine, I find that I'm more likely to overtrade and take a lot of losses.
But if you've been doing the work, if you've been studying quietly, in the waiting you'll spot them instantly. Isn't that the difference between catching the move early and chasing it after it's already run? And let's not forget the mental side. Waiting without preparation breeds boredom. Boredom breeds impatience. Impatience breeds mistakes. But waiting with preparation keeps your mind engaged. It keeps you focused on the bigger picture.
That's another great point. If you're not preparing for your next trade, you're going to get bored and then you're going to overtrade. So even when price action is happening and I'm waiting for my level to get hit, I'm always doing like a mini routine of checking levels to see whether there's another high probability trade that's happening as the price action is building. So I'm never really bored even in between price action.
Preparation also strengthens discipline. The more work you put into waiting, the less willing you are to waste it on poor decisions. If you've spent days preparing for a certain setup, you won't squander your focus on random trades. You'll respect your own process.
This is why back testing and forward testing is so important, because it gives your subconscious mind that focus and that confidence to know that your better trades are coming, and just ignore price action when it doesn't give you that trade. So this is like really wise advice, and if you found this useful, subscribe and let me know in the comments if you want to see more trade discipline, trade psychology, trade analysis breakdowns like this.